Inflation rate now right at 3%. So all eyes with this are on the Fed Chairman Jerome Powell, who says he wants to see more good data before cutting interest rates. Maybe this does it for him. Doug Flynn's here, co-founder at Flynn Zito Capital Management. What do you think? You were saying yesterday, right, September for when we get lower interest rates, and this confirms that, or?
It makes it, well, the market thinks it's about 90% likely that it will be September. And there's some really good numbers in here. And this is the first month-over-month negative inflation number. So actually prices went down for the month. And we haven't had that happen since May of 2020. So it's more of that information that they wanted to get confirmation of that makes it easier for them to potentially lower rates in September.
The president's got other things going on, but otherwise, this, to your point, but this would be good news for an incumbent president. Usually, this is what they want. I mean, this is proof that things are going the right way in the economy? I know the job market was the thing people are kind of worried about, even if inflation there it is under Biden and where it's been going. The jobs we're still a little bit worried about maybe being soft.
Yeah, I mean, there are signs of a weakening economy, but also the problem that they have with inflation is that people still have sticker shock. Even though grocery store inflation has been about 1% year over year, people still focus in on the one item that went up 20%. They just do because they've suffered that 20 and 30% increase already. Everything is on top of that. So I think that's part of the reason why it's going to take a couple of months. I don't know if it's going to happen in time for the election for them to get any kind of credit.
Well, yeah, and again, there's a lot going on right now in case you haven't heard in terms of what people are paying attention to. Let me skip, speaking of the president, let me skip ahead and talk for a moment here so we give time to another thing that might have gotten more attention today if it wasn't for all the politics in Washington on electric vehicles. It's kind of a lifeline, supposedly, from the Biden administration to EVs, with the Energy Department giving the automakers and suppliers almost $2 billion. They want to save at-risk or shuttered plants. Thoughts on this and the impact of this?
Well, it's interesting. I think that, what they're trying to do is exactly that, retool some of these, maybe even closed, or the biggest one I think is $500 million to a plant in Michigan for GM that would convert it to EV production. But that's the interesting thing. A lot of these states happen to be Michigan and Pennsylvania, where these monies are going. So perhaps there's a little bit of a backdrop there. But it also kind of fits their agenda. It combines the manufacturing thing they're trying to do along with the climate thing they're trying to do, and pushing that along together. So I think there's some good things there. It saves union jobs. And it also, there was a fear for a long time, if you remember, a lot of the union workers were worried with the EV push where they were going to be able to keep their jobs. And so this also secures some of those jobs for those people as well. So there's some good stuff in here, and that money has already been allocated. So that's also a good thing.
So in less than 2 minutes until the closing bell on Wall Street, we'll give everybody the closing numbers at that time. Mixed day with the Dow up, the NASDAQ down. But I'll give you 3 headlines here from American companies, what they're doing today, and kind of give a dealer's choice about which is important. So we're in earnings season, right? So Pepsi came out. Pepsi's its stock was higher earlier. They beat estimates. Costco was another one we're watching, lower after raising prices for its membership, and Delta Airlines missed estimates. So what do you take away from what we heard today on the earnings front?
So what you're seeing with Costco, it's kind of a normal thing whenever they raise. They hadn't raised in 7 years. They normally raise every 5 years, that their price goes down a little bit. The other stocks are basically, it's not just about this quarter, whether they slightly beat or slightly they slightly missed. It's about what's the expectation the next quarter, the forward guidance that we call it. And a lot of these stocks are really fully valued. So the problem is you really have to come in with, beating and also future outlook even being better for the stock to kind of move positive. A lot of these things are really fully priced. So that's what you're seeing there, is not just look at this quarter, but look for the guidance and what they're saying about what the next quarter is going to do, because that's where you're really going to see more about whether or not this is something to consider.
All right, let me run, Doug. We got to get the numbers on. Also, somebody told me there's a big news conference tonight. I don't know if you know, so make sure you get home in time for that. All right? Thank you, Doug Flynn.